Most of us have known or at least heard how some of the richest people in the world pay little or no taxes at all. It's not just Amazon paying zero in federal income taxes. Tesla's founder paid nothing in 2018. I know people making tremendous amounts of money who pay virtually no taxes. What's interesting is that governments originally only taxed the rich. So, let's explore how the wealthy legally minimize their taxes by breaking down key ideas from Tax-Free Wealth by Tom Wheelwright. Lesson 1. How the poor started paying taxes after World War II. Governments realized taxes were a powerful tool to fund societal rebuilding. Instead of taxing only the rich, they expanded taxes to the middle class. Initially, people were taxed only on income beyond basic living expenses. Governments soon noticed that tax policies influenced behavior. By offering tax breaks for specific investments like businesses or housing, they could steer economic activity. Over time, tax laws evolved from simple revenue-raising tools into complex systems shaping entire economies. Rather than fighting the system, the wealthy learned to use saving on taxes by playing by the rules. Lesson 2. The 4 types of income. Tom Wheelwright uses Robert Kiyosaki's cash flow quadrant to explain how income type affects taxation. Employee income, earned income. Highest tax rates, 10% A, 37% federal, plus Medicare, Social Security, and state taxes. Tax-deferred options, for example, 401k, IRA, postpone taxes until retirement, potentially at lower rates. Self-employed income. Still taxed as earned income but with some business deductions. Pay both employer and employee portions of Medicare, Social Security taxes. Business income. Corporations pay a flat 21% tax. Businesses deduct expenses before taxation, reinvesting profits to grow wealth. Investor income. Wealth grows tax-free until assets are sold. Passive income. For example, dividends, rental cash flow, taxed at a currency 20%. Strategies like depreciation, more below, can reduce or eliminate taxes. Lesson 3. Tax strategies of the rich. Creative deductions. Business owners deduct expenses like work trips, for example, a Vegas vacation with 51% business activities. Tax credits. Tesla benefits from R&D credits for clean energy innovation. Entity tricks, as corporations pass through profits to owners' personal taxes, often at lower rates. Example, a business owner adds parents as co-owners to split income into lower tax brackets. Wealthy individuals rely on experts, tax advisors, attorneys, bankers to navigate loopholes legally and protect assets. Final thought, tax avoidance isn't about evasion, it's about understanding the rules. As Wheelwright argues, the system rewards those who invest in growth, businesses, real estate, over those who rely on wages. For deeper insights, explore Kiyosaki's cash flow quadrant to learn how to shift from high-tax, employee/self-employed, to low-tax, business/investor, quadrants. Key improvements: grammar/punctuation, fixed run-on sentences, added em-dashes for clarity, and corrected verb tenses. Structure, organized ideas into clear sections with subheadings. Conciseness, trimmed redundant phrases, for example, literally following the rules, playing by the rules. Flow, added transitions, for example, rather than fighting the system, for smoother reading. Let me know if you'd like further refinement.